Challenges to antitrust enforcement, inadequate framework of analysis. I would argue that traditional antitrust really focuses on some very basic metrics. We're obviously interested in the effects of mergers and anti-competitive conduct on prices and output. Those are sort of the first things that flash onto the screen. To some extent, enforcers are interested in quality. For example, will a merger that creates a dominant firm negatively impact quality? I think we would all argue in this room that in agriculture that's more than likely to be the case. Maybe there's some concern about innovation, but those are definitely secondary to price and output. All right, so antitrust is really simple. It's very narrow, it focuses on a narrow set of metrics, but it largely ignores unique features of agricultural markets like food safety and reliability. If we get these big conglomerates in our food supply chain, are we going to have quality? Are we going to have reliability? Are we going to preserve safety? It largely ignores diversity and redundancy of producers. Whenever you have a very small number of producers, you lose the redundancy in the supply chain. Supply chain becomes very fragile, bottlenecked in parts, and that's not a good outcome either. And that goes to the stability of the food supply chain. Barry Lynn is back here and has done some really interesting, innovative thinking in general on supply chains and fragility. And then, of course, there's the biosecurity issue. So antitrust isn't going to consider any of these factors on the lower part of the slide. It will consider price and output, maybe quality, maybe innovation, but it's not going to account for the effect of mergers, the effect of anti-competitive conduct on any of these other factors. All right, challenges to antitrust enforcement. Immunities and exemptions. This really complicates the picture even more, and it's even more depressing. 35% of all immunities and exemptions from the U.S. antitrust laws involve food and agriculture. 35%. So we have 20 immunities and exemptions. About 7 of them, and these are just from the antitrust laws. These aren't, stuff that's written into statutes. This isn't stuff that's been implied by courts in decisions. But of all the ones from the antitrust laws, 35% involve food and ag. The big biggies, the big baddies are the Capper-Volstead Act and, of course, the Webb-Pomerene Act, which sanctions export associations. Bob just talked about that. Capper-Volstead, that's a little bit of a touchy issue with a bunch of producers in the room. Capper-Volstead gives immunity to agriculture marketing cooperatives, and they did so, they achieved important goals in the early part of the century, and that was to allow producers to band together, to engage in collective bargaining. Webb-Pomerene in 1918 had some very laudable populist goals, but the markets have changed so significantly that these exemptions and immunities are actually creating more damage in the market than they are promoting beneficial outcomes. All right, challenges to antitrust enforcement. Worsening competitive problems. Dudley touched on some of this stuff. Lots of excessive consolidation, the development of very powerful buyers, particularly in the midstream segments, what I'll call the midstream segment, so that includes the packers, the poultry processors, the millers. So all of these midstream processors are pushing back on who? Why do they want to consolidate? Why do they need the power in the midstream segment? Because they're pushing back on the Walmarts of the world, all the powerful buyers down in the retail segment. All right, we have vertical integration. The Horizon Milling ConAgra deal, which is currently being looked at by DOJ, will create an entity that will have, I described it in a letter to the FTC, that will have a wingspan that blankets the middle part of the wheat supply chain, all the way from providing financial services to farmers, to elevators, all the way down through food production. So you're going to have an enormous entity covering the middle part of this supply chain. And then, of course, the fourth problem, competitive problem, is collusion. And that's where our fertilizer issues come in. Segments most affected, you all know this: agriculture inputs, seed, fertilizer, processing, packing, poultry processing, milling, food manufacturing. We got the private labels and the brands that are being implicated in a lot of consolidation. And then certainly in retail grocery, I think Walmart's market share is now what? Anybody have the most recent number? It's about 32% of retail grocery markets. Okay. Challenges to antitrust enforcement, supply chain effects. I've talked about this already. When you get all this consolidation, particularly in the midstream segment, you get bottlenecks, right? Everything has to funnel through one or two processors, a tight oligopoly of firms. That's a bottleneck. You don't want bottlenecks in the processing segment of the supply chain. It creates a really unstable supply chain with no redundancy. And it's very exposed to potentially to quality issues, reliability, bioterrorism, all this kind of stuff. And then of course, here's our problem: relatively powerless producers. So you have a very competitive upstream producer segment, whether it's growers or ranchers. You've got a bottleneck in the midstream segment, and then the grocery segment downstream is becoming increasingly concentrated. All right. So farmers are seeing less of the retail food dollar. We've shown that multiple times in multiple mergers. Disappearance of small-scale farming and loss of economic growth, diversity, redundancy, and product differentiation. You know, I talked to a lot of farmers who are retooling and repositioning themselves to deal with farmer markets. But I don't think farmers markets are to the point yet where they're a viable competitor for large retail grocery outlets. I come from Boulder, Colorado, and everyone's at the farmers market all the time because it's a hugely educated, affluent population that is really nuts about organic and healthy eating. But I don't think we can count on them to save the day. All right, the troubling case of fertilizer. What do we have? You've already heard some of it. We have the exercise of market power by sanctioned export cartels in the United States and in Canada. All right? What goes on overseas with the Russians or in Morocco, that's obviously the exercise of market power as well, but they're not U.S. companies, so they're not within the jurisdiction of the United States government. Bob has alluded to lots of anecdotal evidence. There have been meetings between competitors. There's lots of signaling that goes on. The airlines do this all the time. You know, they signal capacity cuts on certain routes. Prices go up, availability goes down. There's lots of signaling because there are so few competitors. And, you know, when you meet in smoke-filled rooms or you publicly state that you've come to agreement with your rivals on price levels, that's a competitive problem. That's a collusive, oligopolistic type of problem. Bob has alluded also to, actually shown us graphs of Lerner indices. Lerner indices in economics are just simply very basic measures of prices above costs. And more recently, we've seen downward pressure on prices by organized, powerful buyers. So China and India, who are feeding huge populations now, right, and who are worried about food security and food stability, and the Middle East is all over this too. I spoke a few years ago where a whole bunch of Saudis showed up. A couple Saudi ministers were on my panel, and they're very concerned about food security. They cannot feed themselves in the Middle East because they don't have the right geography to feed themselves. So we're developing, or we're seeing the development of large, organized, powerful buyers. In fact, one of the Russian phosphorus producers, Phosagro, basically said 2 weeks ago or last week that they wouldn't be selling to India because they were pushing the prices down so low. So that in itself is evidence that we have a competitive problem. When powerful buyers band together and they push prices down and the producers freak out and defect from the agreement, that's evidence that there's anti-competitive behavior afoot. All right, so we got supernormal prices creating enormous scope of damage, right? Producers, growers, anybody using plant nutrients, animal nutrients, pay higher prices, but their ability to recoup higher input costs is limited because they are now dealing with powerful buyers in the midstream segment, like the packers, like the processors. So once again, you know, farmers, growers, ranchers are at the mercy of a very impaired market structure in different parts of the supply chain. What does gets passed on ultimately in the form of higher food prices to consumers. In the United States, fairly affluent country, that may not be such an issue, but obviously in other parts of the world, that's a big issue, just being able to pay for food as opposed to other essentials. I took this from a recent USDA study. This shows the ratio of input to output prices for a bunch of input sectors. So fertilizer, you see fertilizer is the blue line, huge pop starting around 2002. Bob showed you some of this earlier. We see huge increases in crop seed, so this ratio is increasing over time. Farm machinery, ag chemicals, and animal feed. By the way, for those of you who follow USDA, the Economic Research Service tends to put out some of the most objective analysis. For the first time, I think ever, from the USDA, we are starting to hear murmurings that these markets are not competitive. They've said a lot recently on crop seed, in innovation. They've said a lot on fertilizer. These are really, for USDA, for them to be saying this stuff, I think really is indicative that there are some underlying problems here. All right, and then to finish up, what are the enforcement problems in fertilizer? Well, Bob also alluded to the fact that there's been few enforcement actions, right? We just don't see it. FTC is rubber stamping the export, the Export Association applications every year. There's little or no movement towards removing the antitrust immunities and exemptions. Now, in 2007, the Antitrust Modernization Commission, which was formed under the Clinton administration, was specifically charged with reviewing immunities and exemptions. And the recommendation really across the board was that those were to be disfavored. In many cases, we want markets to be operating efficiently. We want market signals to be able to direct resources. And all these agricultural immunities and exemptions, particularly web commerce, which enables these export cartels in fertilizer to function the way they do, that needs to be addressed. But that's a big policy issue. That's a big legislative move. And then, of course, Fred and I were talking about this earlier. The penalties generally across the board are insufficient to deter anti-competitive behavior. This is the crime pays problem, where the penalty that you get, and in this case, we're talking millions in settlement costs versus billions of dollars in damages. I mean, we're talking orders of magnitude. And when you have settlements that are that puny, firms just view that as a cost of doing business. Okay, so I got slapped, they found out, so now I get to pay my fine, and then I'll be merrily on my way for the next opportunity to engage in anti-competitive behavior. And this isn't just in agriculture either. JP Morgan was just fined $410 million by the Federal Energy Regulatory Commission, right? For manipulating electricity markets in California. Somebody calculated that fine, that $410 million fine, was probably a half a day's worth of profits for JP Morgan. Yes, and it was one of the biggest fines ever, which tells you something, right? Okay, so the antitrust agencies really struggle with this. They struggle with how to, it's not that they don't have the authority, it's largely a question of how the analysis is done, political willpower. We could talk about the states for a whole session. The states do best when they band together. So when the states can get together, when a bunch of the AGs from the more sophisticated states can band together, like California, Texas, New York, you know what the big states are, then they do better. But an AG going alone on a case like this would be much more difficult. But it's a really good question, and it comes up a lot. Why aren't the states doing more? Well, they should be doing more. Closing thoughts. So you got to get DOJ, FTC, and USDA to the table. I know that USDA is viewed as a captured agency, which in many respects it might be. But any progress on the antitrust front in agriculture and in fertilizer in particular is going to require some marrying up of competition policy and public policy goals. Because the regulator is the one who has to be concerned about safety, quality, reliability, stability of the food supply chain, et cetera, et cetera. I don't think, in other words, each the regulator alone or the antitrust enforcer alone can handle these problems. There has to be some sort of coordinated, concerted effort. All right, I would also say that, you know, this recent breakdown in cartel pricing for fertilizer is just temporary. Cartels break down all the time. You know, individual producers, members of the cartel will shave their price and expand out, but because it's profitable for them to do that. Well, when you have defections like that, then the cartel breaks down. But then they reorganize. Now, it's going to be a little more difficult for the fertilizer producers, the cartels, to reorganize because they're dealing with huge, powerful buyers now. But they'll get it together. They've been doing it for a long time. And they will reorganize, pull their pricing strategies together. They're trying to keep BHP Billiton out of the market, which is threatening to lower prices even more. But there will be undoubtedly a reorganization. So just because this has happened in fertilizer doesn't mean that the FTC and the DOJ can go home and call it a day, that the competitive problems are over. And I think from the perspective of pounding away on the antitrust agencies and USDA on these competitive problems, it has to be more than just about price and output. We've seen rashes of mergers go through that have increased prices and restricted output. So if that's not working, if the messaging isn't working there, I think it's time to really turn to these other factors that I alluded to. Diversity of the food supply, quality of the food supply, right? Stuff that Dudley was covering earlier. Opportunities for bioterrorism that increase when you have a very fragile supply chain, all these things. Media coverage is huge. I talk to more ag reporters than any other type of reporters in the course of my workday. There are many, many reporters interested in ag. There's huge media coverage, and that can be used to our advantage. And certainly grassroots efforts like OCM and others play a hugely important role in getting this message out. And with that, I will leave it.